What's up, guys? Welcome back to Road to the 2 Comic Club. Justin here, and another recap video coming at you guys with May 31st and June 1st. Let's just get into it. I'm trying to keep it to less than the last video, so let's see what we can do here. Alright, so May 30th, stocks did not do very well. Facebook did have a good day, though, and Google also had a good day, as you can see in the screenshots, the widget there. But the Dow went down 252 points, and the NASDAQ down 20 points. Again, main headlines in terms of general news, trade wars, still people worrying about that. But this article did say Wall Street slips on renewed trade war worries, but posts monthly gains. So the S&P 500, the Dow, and the NASDAQ had their biggest percentage gain since January, so that was awesome. I think as a whole, May was a pretty good month for stocks in general, so that's awesome. So looking at our winners here, we closed at $168,295.70. So we did lose a little bit, about $1,200. But our winners, we have Red Hat, and I'm noticing here that I believe Red Hat really hasn't moved from looking at like the last close price. So really, I'm kind of just disregarding that one. Its price hasn't moved in several days. So, but Nvidia, Tesla, Google, GM, Alcoa were also up there. So I'm hoping most of those moved in the positive directions, and I'll post the rest of them so you can see here how the rest of our positions did. And if I'm going too fast at any point, feel free to pause it. But going to our losers, we had Universal Display, Micron, Boeing, Domino's Pizza, and Apple. So yeah, let's just go into the articles now. So we have a bunch of them, so I'm going to kind of talk about some headlines. I'm going to post of course I post links in the description for all these articles. I will skip some of them. I kind of will gloss over them. So if it is something that you are interested in, let's say it's a piece of news that you missed, just go in the description and you can click the link and just kind of skim it through it and kind of see if you missed anything. So yeah, that's kind of what the links are for. So with Facebook, we'll start with Facebook. So they had a shareholder meeting, and people were still pissed about the Cambridge Analytica scandal. So the first couple articles I'll post will be about that. Also, an interesting one had to do with teens dump Facebook for YouTube, Instagram, and Snapchat. So according to this article, they did like a Pew survey. YouTube, about 85% of teens are using that. 72% are using Instagram. 69% are using Snapchat. And only 51% are using Facebook. So that is an interesting statistic there. I personally also use YouTube and Snapchat a lot more than I use Facebook. I just too much negativity on there for me, and it kind of just got old for me after a while. But I still do like Facebook as a platform, and I still do like Instagram as well. I don't use those as much. I'm trying to use them more, but anyways, let's just keep going because I don't want to keep rambling. But they did mention, if you want to read that article, they did mention that Facebook does have a higher user base among lower income people, and they mentioned that could be because you don't need like the greatest software to run Facebook on mobile, whereas YouTube requires a lot of data. So it's a good, interesting article. I would give that a read if you have time. With Google, this one is why did Google list California Republicans as believers in Nazism? Apparently it was a Wikipedia kind of error that someone just posted it and Google picked it up. So I thought that was kind of an interesting little thing that happened. Not huge news, obviously, in the grand scheme of things, but link will be in the description for that one. And then Waymo's self-driving car service to include 62,000 minivans. So that could be a huge deal for the Fiat Chrysler, because they're the ones providing all the minivans. And so that's an interesting article to read. Link will be in the description for that one. Another article that I just skipped over is called Microsoft in May, Acquisition, Build Conference, Analyst Views, and More. An interesting little tidbit here is Microsoft acquired a startup called Semantic Machines that have been developing technology for voice-enabled agents to operate much like, Alphabet's Duplex. If you haven't heard of Duplex yet, if you missed that piece of news that did happen a little while ago, Google that up because it's like a super, super advanced AI voice assistant. It could even schedule haircut appointments for you. It could schedule like reservations at restaurants for you. And it's really, really hard to tell whether you're talking to a robot or not. So anyways, that's a really interesting acquisition for them. So I thought that was interesting. So I'll post that in the description. And this other article about Facebook prevails on shareholder votes, tallies to come later. It's talking about just some, shareholder meeting stuff. But if you might be interested in that, if you invest in Tesla or invest in Facebook. So I just want to keep going on. So let's go on to Zillow. So Zillow stock rallies into record territory after bullish call by the Canaccord Genuity analyst. I'm sorry, I can't read my own writing. I write way too small. But Maria Rips initiated Zillow with a buy rating and a price target of $65, which is 11% above current levels. Now, they say we envision a future where Zillow evolves into more of a commerce platform, progressing from its current role as a media property and moving gradually closer to enabling direct transactions. I think I talked about this recently, how Zillow is getting into the house flipping game, so they're probably going to be more direct related to the sellers. So they'll be buying houses directly, kind of getting rid of the middleman and making more profits that way. So I think that's another reason why they think the stock will go up. And so let's just move on. That's an interesting article. I will post a link to that. A couple other headlines that said, as of this editing, I forgot to mention that Zillow is up 43.5% year to date. Zillow's doing very well this year, given in the grand scheme of things. Now, Zillow CEO defends Facebook. He was talking about, again, the privacy thing, but the CEO of Zillow, if you don't know who he is, you could look at these articles and kind of get to know him a little better. Actually, put a face to the name, because I personally hadn't seen him before until I looked up these articles. So I'll post links to that so you can check out who the Zillow CEO is and kind of make your evaluations on him. But so he talks about Facebook, and then also this other article just related to homeowners in general. This article says less than 10% of homeowners are underwater on their mortgages. And so this is a very good article. It mentions that, more than a decade after the housing market collapsed in 2008, the recovery has passed a good milestone. It says the share of homeowners who owe more than the value of their home, which is what it means to be underwater, it's 9.1%, falling below 10% for the first time since the housing market fell. So I thought that was a really, really good piece of news. And there's a lot of other data in this article. So if you are investing in the stock market, as you know, home ownerships, the housing market plays a huge role on affecting the overall market. So I would definitely recommend reading this article because it's got a lot of other information in there. Now, let's go to the next day. I'm going to pause real quick to rest my arm, and then we'll come back. All right, so June 1st, we had a really, really good day today. So take a look at how the stocks did. So green all over the place. The Dow finished up 219 points. The NASDAQ finished up 112 points, which is always huge when the NASDAQ goes up triple digits. So we closed at $176,768.23. So a little over $8,000 profit for today. That was amazing. Really excited about that. So on our winners list, you'll notice Red Hat in the middle. Amazon though, Google, Alibaba, they all actually did change, and so I'll post their updated gains on the screen for you to look at. And then you can look at the rest of our positions. So again, if I'm going too fast, you can pause, but you can see all of our positions, how it did. Now our losers, we had Domino's Pizza at the bottom again. However, I was checking with prior closing prices, so that $18 has been the same for a little while, so that actually has no change. So actually, I wouldn't count that as a loser today, so that's actually good. But you can see our other losers here. We got Alcoa, Home Depot, Stamps, Universal Display, and Temp Americana. So you can look at that. Now, I do want to talk about the Universal Display call, because in the last video, I told you about that call option that we sold. Now, right after we sold that, the price went down, and then it still finished up for the day, but the next day it went down $4, and so it ended up closing at the week $99.55 a share. So with our strike, we were definitely perfectly fine. We got to keep our shares, we got to keep that premium, and so I'll be looking to sell another covered call on Monday. So good news with that one. Okay, now, sort of, I guess, because the stock did kind of go down. But let's just go into the articles so that I can keep this video as short as possible. This article, Tech Leads Wall Street's Advance After Strong Jobs Data. So there was a strong jobs report, and that was one of the main reasons why the stocks rallied so much. And so I'll post a link to that one so you can kind of just summarize if you want to read a summary. Again, this is old news by the time you're watching this, but if this is a documentary after all, so if you're coming to the channel kind of late and you're binge watching a bunch of episodes and you kind of want to see what's happening at the time of this video, again, links are in the description. You can definitely check them out. Now, this article is called Opinion, Sorry Stock Investors, a Hot Summer Market Rally is Just a Mirage. It's actually a good article, just kind of talking about how don't invest just on the hype. Just because someone says, summer is usually a good summer rally. We always get summer rallies in the summer. Don't make your investment decisions just based on that, because he shows some compelling evidence that shows why you don't always have rallies in the summer. So that's a good article to read. Now, this one is very interesting about Stamps.com. So apparently, they own this company called Shipping Easy, and they won 2 Stevie Awards in 2018 for American Business Awards. I never heard of that, but anyways, it's a leading provider of cloud-based shipping, inventory management, and customer marketing solutions for e-commerce sellers of all sizes. So that's who Shipping Easy is, and they've been winning awards for good customer service and stuff like that. So, and since they're a wholly owned subsidiary of Stamps.com, that is some good news for Stamps.com. So I'll post a link for that one. They also integrated with Reverb.com, which is the world's most popular music gear website. So I will post a link for that one. I'm just going to keep moving along. Now this one, Baidu, Alibaba, and Tencent are all investing in this hot IPO. So what is this hot IPO? It is Foxconn Industrial Internet. So Foxconn Industrial Internet is a subsidiary of the Taiwanese contract manufacturer Foxconn Technology Group. You might have heard of Foxconn because they're the ones who manufactures a lot of components, especially for Apple's iPhones. In fact, Apple is one of their biggest customers, if not the biggest, I think. So I'll post a link in that one. That's very interesting. Again, if you invest in Baidu, Alibaba, Tencent, they're solid Chinese companies to own stock in my personal, non-financial advisor opinion, but a lot of people like those companies. They're very solid. The next one, Ray Dalio, who I have a book written by him, which I need to read. So he's a very famous investor. He says, sell expensive stocks, party like crazy. Apparently he was doing a Q&A on Reddit and was just basically telling people to sell your high-priced stocks and look for better value ones. This art, he didn't name anything by name, but this Investopedia did pick some stocks to talk about. And they picked Netflix, Amazon, Nvidia, Grubhub, and then compared it with the S&P 500. They talked about the trailing price for earnings ratio. The percentages are like Netflix, for example, they went up 294% in the last 3 years, but they have a trailing price to earnings ratio of 236, which is really, really high. And so it kind of talks about whether those are kind of overpriced or not. And my personal opinion is, since a lot of stuff is based like on the stock prices based on what's going to happen in the future, it's kind of, you don't always want to just go off that one number just by itself. A lot of people do, and a lot of people miss out on a lot of profits because of that. However, it's good to know that number just in case you do feel like it might be a good time to get out of a stock. It is good to check that number anyways. But again, it is a ratio. So how ratios work, they're just fractions. The denominator gets bigger, the number gets smaller. So all it could take is, a good earnings report and much bigger earnings. And if the stock doesn't go up as much to match that, the price to earnings ratio will drop. So it could go down pretty quickly, just as much as it goes up. So anyways, that's just my personal opinion on that. But let's keep going. Okay. Netflix could be worth up to $750 per share in 3 years, says RBC's Mahaney. I will post a link to this because it gives some really good, compelling reasons why he thinks the stock could be $750 per share. Again, that would be a huge price earnings ratio if that did happen, unless their earnings went up to match that. But that would be amazing. $750 per share for Netflix. Oh my gosh, that'd be a huge. That'd be huge. Okay, so we're at the home stretch. Facebook, Apple, and Amazon set new records. So like I showed with the stock widget earlier, all the stocks were green. Facebook, Apple, and Amazon did set record highs today. So that is awesome. Apple did rumor that some people were rumoring that they might release a cheaper smart speaker, perhaps one that's branded with the Beats branding. We don't know for sure whether that's going to happen or not. I still don't think by the time you're watching this they'll know. But this article is talking about Apple's HomePod is coming to Canada, France, and Germany June 18th. So I forgot. I wasn't even realizing that. I thought they just kind of released it globally. I didn't even think about that. So now that the smart HomePod is going out to more markets, it could drive up profits. However, I don't think their HomePod has been selling particularly well, maybe because the price is really big. And of course, Siri is one of the worst. Out of the 3 voice assistants, I think they're the worst one. So, yeah, I don't know what to think about that. I mean, we'll see what happens though. So let's just keep going on. Android circuit, new Samsung Galaxy S10 leak, boring Note 9 specs, and Google's serious Pixel 3 problem. So I'll post a link in the description to kind of talk about how they were talking about the Note 9 and how the front camera is still going to be the one from the Galaxy S9, which people didn't like. So that was kind of interesting. However, I scrolled down and noticed that the Pixel 3 is going to be using the XL at least version. Yeah, the Pixel 3 and the 3 XL are going to be using the OLED technology from LG, which Universal Display makes those components, and so they could stand to profit a lot. However, Forbes' Gordon Kelly is not happy because she said that the biggest criticism of the Pixel 2 XL was the OLED screen and how it wasn't a superior screen. Samsung's screens for the other phones were better. The regular Pixel 2 used the Samsung screen, so she said that screen was better. However, they say this article says a lot can change in the year, so maybe the LG could improve on their OLED screens, which I would definitely hope is the case because I do want Universal Display to do well. And it also comes down to LG actually making the screens. It's not just Universal Display, but LG needs to pull through and make a good display out of that technology. So it's kind of a team effort here, but sadly, if LG does poorly, it could hurt revenue and sales for Universal Display. So with that said, we did have a great day on Friday today. So I hope you guys like this video. If you did, please hit that like button and subscribe if you haven't already. Again, all the links are going to be below in the description. Yeah, I'm going to keep doing these recaps until I get caught up. So if you have any questions or comments, please post in the comment section below. Hope you guys have a good weekend, and we will see you guys on Monday.